My friends in the military don't see this ending in the short term. And I know Trump keeps saying that. I could see this going, unfortunately, until the US stock market can't handle it anymore. Oil at $100 is mentally very scary for a lot of people. I think the thing that has changed with Bitcoin, and I haven't seen many people talk about this, is the last time it was kind of in that uptrend, the institutions weren't involved in it.
We're about to enter a period of much higher volatility, warns our next guest, technical trader Kevin Steuer. Now that's probably bad news for buy and holders, but with more volatility usually comes more trading opportunities. Kevin is the managing partner at StockTA.com, and he has an interesting and unique way of analyzing charts using his proprietary platform. He's not just looking at one or two technical indicators, he's looking at how an entire set of indicators move together. We're going to be getting his trading signals for the stock market indices, Bitcoin, gold, oil, and how to trade the coming volatility. Also, I'm launching a second channel this week. It's going to be a clips channel. I'll extract highlights from my long-form interviews and post them as shorter sub-minute clips. I'm doing this because I know how busy we all are, and sometimes we just want to watch a small segment on a topic or asset class that we're currently monitoring instead of watching an entire 30-minute conversation that covers multiple topics and asset classes. So the link to the channel is in the description down below. Subscribe now, and you'll be the first to get notified when the first videos drop this week. This video is sponsored by Kalshi. It's a fully regulated platform that lets you trade on real-world events, from economic data to political outcomes. Sign up and use my code LIN, L-I-N, link in the description down below, or scan the QR code here. New users will get $10 deposited to your account when you trade $10. Traders can put money down on their favorite teams, events, elections, and more in all 50 states, including California and Texas, and over 140 countries. Kevin, welcome to the show. It's good to have you.
Thank you so much for having me. Really look forward to this.
Major moves that we'll be talking about that's happened over the past day. Oil went up to $119 a barrel before coming back down to 92, and we're currently sitting at 82 now as we speak on Monday, March the 9th, closing at after market hours. And the stock markets had a pretty good day. The NASDAQ reversed its losses, turning green by the end of the session. Bitcoin's up 3%. Gold slightly down on the session. What are, let's say, the biggest drivers of volatility right now, in your opinion?
I would say the price of oil for one, but also just the general conflict in the Middle East. And I think the broader implications on what that can mean for inflation and rate cuts and midterms coming up. I think there's just a lot of uncertainty, and I think the markets were flying, and I think we could be volatile for a little bit here going into the summer.
Can we pull up an S&P 500 chart and start there with the broad market index? The S&P has been trading sideways for a few months now, ever since October. It peaked around early January, and now it's been rolling over ever since middle of January. And it looks like it's in the beginning of a larger downtrend. Can you just confirm that?
Yeah, do you want me to share my screen and I can show
please.
what our charts show? Okay. So this is the close from Friday. We haven't published our data yet because it's close to right after the market. So we definitely are. We measure things from very bearish to bearish, neutral, bullish, very bullish, and it's definitely lost its momentum. It is short-term neutral with a negative trend score and bearish overall. And if you look at this, we use a confluence system, and the higher the confluence number, the greater support or resistance. And there's not much for support here. So I do think there's more. There's more risk to the downside than there is to the upside. You see a lot of 7s and 8s for resistance, which would be like a medium, and you see a lot of 2s and 4s, which is light support. So the setup here, in my opinion, is not great.
What does not great mean? Bigger downtrend?
I think we could see a move down here to probably 650. I don't think we're going to see a massive sell-off unless things in Iran escalate. I think if things I watch are the VIX. If VIX has a couple days and stays over 30. I watch the 10-year. I watch the MOVE index. All these different. Obviously, I have to watch the dollar. So there's certain thresholds that if all those hit, you're going to have probably either a liquidity crisis or margin calls coming in, and that's when you see some really big sell-offs.
Can we just maybe back up and talk about your technical analysis and how your methodology works before we dive back into the S&P 500? Just tell us about some of the indicators that you use and follow, and how you come to a conclusion here.
Yeah. So
first of all, do you trade by yourself? Do you trade yourself, by the way, or do you just do analysis?
Yep, I trade myself. So a full-time trader, been trading for a long time. Been offered some trading positions to run some family offices, and I didn't like the strings that came along with it. So I'm just a
Mm,
fully independent trader, run my own book. And basically, the website we use EMA, we use MACD, RSI,
yeah.
Fibonacci, trend, stochastic, all the different things. And what's really cool about our site is we have 161 million rows of code, which makes it a really sophisticated algorithm. And JP Morgan came out with some stats a couple years ago that said they estimate about 90% of all US equity volume is driven programmatically, which means by computers. And all these big funds that move money around have their own proprietary algorithms. So when you're trading, a lot of people think, I'm trading against another guy. No, 90% of the time you're trading against a machine. And what we've learned is, you know, humans have emotions, don't make great, decisions when it comes to managing money. And if you're not good about kind of blocking out the narrative and managing your emotions, you can focus on the wrong noise in the market and lose a lot of money. So what we're trying to do is we're trying to give Main Street access to an algorithm like this to just give you another tool in your toolbox, right? Like it's not a level fight right now. And I think just how the machine moves the markets during the day. Like we saw that today. Today was an absolutely wild day. And thankfully I finished up and my best stock did really well. But if you're not positioned the right way and you don't know how to manage your risk, today was probably a really bad day for you.
And let's just talk about today. So you woke up, everything was in the red, and then it reversed. Can you just walk us through the trading process for the day? How frequently
Yeah.
do you trade throughout the day? Are you a day trader? Are you a swing trader for more of a longer term sort of trend? Tell us
Yeah.
about your day.
So I prefer to swing trade. I made some trades today, so I'm up 22.5% on the year. I've won 77% of my trades for the year, so I'm doing really well. Last year I was up 76.3%. So I'm kind of a mix of a swing trader and a long-term trader. I'm not a day trader. I'm not an options trader. I don't use leverage. I think that's really dangerous with how the system's set up. But I do my market analysis the night before, the morning of. I usually don't trade the first half hour if it's really volatile, like today. I didn't touch anything for the first hour. I like just to kind of see, how the price movement works. And today I sold some stuff when it bounced, and I was up on some stuff just because I'm still not liking the market action. I know Trump's going to speak here shortly. I don't know what he's going to say if the Iran situation continues to escalate. I think we could be seeing some more down days in the market. So as of this recording, I'm 41% cash, and I'm just really, I'm just being cautious here in the short term. Like I think the market's basically even on the air, so I've done a really good job outperforming the market. I just don't want to give it all back in a week if we have some crazy trading going on.
So it sounds to me like you're basing a lot of your trades on current events. Is that right?
A mix of current events and what the charts are picking up. So I definitely am more of a technical person and I look for patterns in the charts. And I just, like I said before, I look at the VIX, I look at some of these other indicators that kind of give me like, basically green light, yellow light flashing, or red light. And right now I'm getting a lot of yellow light. So I'm being a little more cautious than I would be if the VIX was back in the teens and the move index hasn't been moving as much as it has been. I mean, we went from, you know, I don't even know what it was a couple days ago, but I just feel like it's gone up like 20 or 30% in the past couple
VIX at
days. So
27, and it's gone up a lot in the last couple of days. It's at the highest levels since middle of last year, April
yes.
2025.
So I just think all these indicators, and I think oil at $100 is mentally very scary for a lot of people and a big mental block. So I just think people see $100 oil and they panic, and that's going to cause some other issues. So, my longs that I'm up on, like I put out a newsletter yesterday. I've had VRT, which is Vertiv Holdings, as my number one holding for a while. That was up, I think, like 9.3% today. So that stuff I'm still holding and I'm watching, but some of the other stuff like copper really doesn't look good here. I can share my chart with you if you want.
Yeah, please do.
So COPX is from Friday's close, had heavy resistance at 87.08, has lost its trend score. So I got out of COPX I started trimming it last week. I think I was out of it completely today. CPER, which is ETF for the copper miners, also heavy resistance above at 36.37. That's bearish trend in the short term. So I didn't have any of that, but I don't like to be in stuff that's bearish trend if I'm trying to be long it, if that makes sense.
Can you just take this or perhaps another security to walk through an example of how you read indicators? Particularly, you've got to focus on generating confluence numbers. So, your algorithm uses confluence numbers to basically pinpoint how a bunch of different indicators, including EMAs, MACDs, RSIs, etc., converge to create a confluence number. So just it's a lot of fancy words for technical analysis for people who may not be familiar with how you do it. Maybe just walk us through an example.
Yeah. So I'm gonna pull up XLC because that was one I've been watching. So I'm not long this, but I've been watching it very closely.
Yeah.
This was bearish. It kind of broke out a little bit. I look for EMA crossovers and I look for a confluence that has, a heavy number behind it as support. So this is at 117.46. That's Friday's close. It has heavy support at 117.2. So basically what I'm looking for is this is gaining signal strength. It has heavy support underneath it and not much for overhead resistance, right? Like you want something that has room to run. So this one's been on my watch list because, again, I'm not being super aggressive when I buy here, but as I'm looking at, setups, I want something that has kind of asymmetric risk. So this in our algorithm, depending on what goes on with Iran, if the markets are in a normal kind of phase, this is a setup that I usually favor because I think there's upside to it.
Is there anything here that seems really, really overvalued to you that you've been watching so far?
I mean,
and
there's
I
a
guess
lot.
you can maybe also define how you would approach the term overvalued. Everybody has their own way of
Yeah, I'm
approaching
not a
something that's
big value
overvalued.
investor. I do look,
Is
you
there a
know,
difference between overvalued and overbought?
um, that's a good question. I mean, I guess some ways you could argue it's similar, depends on the market cap of the company, I guess, but you could have a situation where overbought would also be overvalued if the charts really run. If that makes
Yeah.
sense.
So
So, but
anything
like
seems overextended. Yeah, please go ahead.
IBIT, I had crypto was back and forth in 2025. I did really well with it.
Hmm.
Did well with, ETH and XRP and some of those other, other coins. But we got out of this, you know, back in the fall, probably somewhere around here.
Yeah.
And like you look at all that overhead resistance, and now it's starting to form a bottom here. That's like medium support at 36.31. But now there's medium resistance at basically 40. So if you're range bound between 36 and 40, that's not a great trade. That's not something I would personally put on. Now, some people, if you're a high frequency trader, that's a little bit upside. You might, try to make that bet and see what happens. But for
Right.
me, like there's always a bull market somewhere. And that's where like this site's been really helpful for me as I run the stock screen and I find, opportunities like I gotta find I had Netflix. Netflix is right here. So like this started to break back out after the news they weren't merging with, was it Warner Brothers or Time Warner, whatever that deal
Sure.
was. But we went long somewhere around here, I think. Once it started to build medium support level, now you look at it, there's not much for overhead resistance. So now your risk reward setup, you're back to a neutral trend score. It's been increasing. You're bullish intermediate. This is a bet that I'm long this right now, just full disclosure. And this is one that I'm up a little bit on. And if, the market gets crazy and Iran makes things worse, I'll get stopped out, but I'll still lock in a profit. And if not, I'm
Hmm.
going to let it run and it might run up to 115 or 124. And then that's a
Right.
nice, swing trade for me.
So, Kevin, I've got just let me share my screen for just a minute. So, here's a prediction market cap sheet. It's one of the biggest in the U.S. S&P 500 close price by the end of 2026. Traders are predicting 12%, 7,200 to 7,300. Overwhelming majority are bullish, basically, because right now we're at 67.96. How would you approach a question like that? How would you, somebody asks you S&P 500 close by the end of 2026? Which way would you put your money? Walk us through the process for evaluating first of all, the direction and then maybe the magnitude of the moves?
Yeah, I think that's tough. I mean, to be honest, I'm not great at predicting,
Sure.
the long-term prices because that's kind of not the trader I am. Like, I just
To
try
be
to
honest, not a
find,
lot of people are.
yeah, I just try to find the trend and I ride it as long as I can. And as long
Yeah.
as the trend stays up, like VRT's been up, 1,000% in 5 years, I keep riding that. It's been great. If it breaks trend and it has a bigger issue, then I get out of it. But I mean,
Hmm.
the market, usually goes up, usually has good years. So if I was a betting man, the average says you should probably, bet the over on it. But I think the quicker this Iran mess gets
Yeah.
situated, like you think about all the stuff that's come out in the past week in the market or 2 weeks, like had the tariffs get overturned by the Supreme Court. You've had a revised job number down. You had a February job number that was a surprise to some people and was down.
Yeah.
So you see all these corporate layoffs due to AI. I don't know if that's true or not, but I think you end up in a situation where there's just a lot of uncertainty. And I think I could see that, carrying into the summer. And I read something about, the U.S. Trade Court or Trade International Court. I'm not a tariff expert, so I'm not probably the
Hmm.
greatest guest to have on this subject. But basically, the U.S. government got called before it, and they said we want you to issue refunds, and
Right.
the government said we don't know how to do that. We don't have the technology to do that. But if you give us 4 months, we might be able to figure it out. And I'm
Yeah.
like, I don't know if I'm on the other side of that, and I'm owed a refund. I mean, I could see lawsuits going into the summer. You got midterms coming up, like I think it could be a choppy market. And if you're a good trader, like there's always good opportunity in the
Right.
chop as long as you manage your risk well. So like
Yeah.
either way, I'll be fine. It's just you got to figure out what your process is and you got to stay disciplined within it.
Well, let's talk about oil then. So again, how high will WTI oil get by the end of the year? I'm not asking you to predict where oil is going to end up by the end of 2026, but let's just take a look at the current trend. Like you said, you follow the trend. Trend's obviously been up, but it's a very short-term trend, and
Yep.
people want to know if this trend's going to sustain. So how do you make that conclusion, whether or not this is a short-term trend or we've got more bullish momentum ahead?
Oil's a tough one right now. I'm not long oil, full disclosure, and that's just because after the Venezuela thing and it ran so much, I was like the price action got weird. And here's where I look at volatility. So the ticker for oil volatility in Thinkorswim, which is one of the platforms I use, OVX is at 100 right now, and the all-time high was I think earlier this week it was 105, but before that it was 12,121. The previous high was 101. So I think when you have oil volatility that high, I think I think it's really tough to trade. So like right now, our algorithm has crude oil in the 70 to 92 range. So if it's at 84, 82 right now, that's kind of in the middle of the range. If it came back down a little bit, maybe I'd take a swing at it. But if I was going to trade oil, um, I'd be looking at stuff that doesn't have a lot of exposure overseas. So like OXY, I know it's a big Warren Buffett holding, but that one is got a pretty good score in our algorithm. So like I've been looking at that lately. But again, I'm doing more kind of watching right now than I am like actually buying. Like VNOM is another one, Viper Energy. I think that's a subsidiary of Fang, which is Diamondback Energy. Like that one I've done really well with over the years. So I'm not long oil right now. That doesn't mean I won't be soon, but I mean, by the time we finish this podcast, Trump could come out and declare that the war with Iran's over. They signed a peace deal. I'm not saying that's likely, but you gotta always factor that in, right? Like you never know what's going to happen, and if that happens, you could see oil give back a lot of these gains that it's had in the past couple of weeks or week and a half.
Yeah, prediction markets are calling for 45% chance of a U.S. Iran nuclear deal before the end of 2026. So yeah, unlikely by tomorrow. War is a terrible thing. We all hope for it to end, but I don't. I agree with you. I don't see that happening by tomorrow either. But how do you evaluate trends overall? Let's just take oil as an example. All right, I'm not.
Yep.
We don't have to give specific levels if you don't have it, but you're welcome to. But something like oil that's run up a lot in the last couple of days.
Yep.
everyone's trying to jump into the market. We're deciding they should jump into the market. And someone asks you, Kevin, what happened to oil just from a technical perspective in the last couple of days? And should I get in now? How do you evaluate that question?
Well, I mean, I think the simplest way is I look for higher highs and higher lows, right? Like from a very, I'm very simple with my technical analysis, right? Like I look at a stock and it's their chart is almost like a resume to me, and they're applying for a job in my portfolio, if that makes sense. And if the chart is clear and it's a long, then I'll go long it. But if I have to justify and work hard to make a trade look good, they shouldn't be in my portfolio to begin with. So I just look for, very simple. Is it making higher highs or higher lows? Do you have, positive crossovers that could be the 5 over the 13, the 5 over the 20, the 5 over the 50, the 20 over the 50? Like there's different indicators you can look at depending on your time frame. But I actually keep my technical analysis pretty simple. Like I see some people on Twitter and they got a million lines drawn on their on their chart, and I'm like, I don't even know what the heck you're looking at right now. Like I don't make trading hard because it's hard enough already. Like that's why I love trading. I think it's the hardest game in the world, and if you win 50% of your trades, you're a great trader. So I think, I think you can stare at charts all day. You can draw all kinds of different stuff. I mean, I think moving out, sometimes if you can't get a clear picture on a daily chart, sometimes moving out at a weekly chart, or sometimes moving out a monthly chart. Like sometimes there can be a lot of noise within the market. Like Microsoft right now, everybody's talking about like its 200-week moving average. Okay, I'm watching it very closely here. It could be a generational buying opportunity. But again, I'm kind of more in a watching mode, and I'm going to see what the price action is on that. That could be a great long, could be tomorrow, could be next week. And to me, the why doesn't really matter as much as the when, right? Like a stock can go up and down for any reason. It's all beyond my control. But what I do have control over is when I enter or exit a position. So for me, that's kind of the big thing is, trying to be patient. And that's for me, that's the hardest part. So that's why like a day like today and last week, like I recorded a podcast last Thursday, and offline I was talking with the other guy, and we are talking about what we're going to do with our stocks on Friday. This is 2 weeks ago before we bombed Iran. And I was like, I think I'm going to sell a lot of my stuff because I don't like the price action here. The Iran thing is just a big unknown. And I think if we do that, the market's going to not like it and we're going to have a bad day. And then Friday, they come out and they said, oh, we've made talks in the peace deal. Things are looking good. And now we find out that was a trap to get them all in one spot so we could bomb them. And Monday, the market tanks at the open, right? And I'm like, well, missed my chance to sell. And then it rallied. And then Tuesday, Wednesday was choppy. Like I did pretty well those days. And again, I'm not trying to be a short-term trader, but I think when the risk is high, you got to be really careful with what you do. So for me, that was, keeping my stops tighter and not entering positions that were, mediocre setups, if that makes sense.
All right. And since you brought up exit strategy, tell us about your exit strategy. Do you set stops? Do you set exact levels? Do you just take profits after a certain percentage point gain?
So I do. I will take, if I hit certain price targets, I will start taking some of my position off. Like I scale into a position. I try to scale out, if that makes sense. So I'm not buying everything at once. I'm not selling everything at once, unless it's like a really weird.
Would you call yourself a scalper?
Yeah, I do here and there. A big thing we found with this site when we back tested it is a lot of these algorithms know where people's stops are because they all use the same kind of trading software. So like if if you set your stop at 60, I've seen this. It happened today, actually. Markets ran down in the morning. They ran everybody's stops. They created all this selling, and then the market came back this afternoon. So I try to set my stops kind of below where that support level is. And if my entry's good, if I find that medium or heavy support before I buy into it, now if I get stopped out, I guarantee myself a profit. And I try to put in those stops. I find our software is a little different because we use a different system with a Confluent system. So I've had really good luck in not getting stopped out of stuff. Like I didn't get stopped out of stuff today. for the most part because of where I set my stops. And that allowed me to come back this afternoon and I finished up on the day, which was great because I feel like a lot of my friends are texting me, everybody panic sold at about 10 o'clock this morning.
Well, give us an example of something that maybe you've bought and it went down. So basically, the trade went sideways. You lost money, and tell us how you exited from that trade. When things are at a loss, which happens to every single trader, what do you
Yep.
do?
So one recent one that's still burned in my memory is I think it's RR. Forget the name of it. It's a robotics company. Oh, find it. I think it's Rich Tech Robotics. Didn't know anything about them. Found them in a scan, and they had decent momentum behind them. Bought it, and within the first couple of days, I'm like, I really don't like the price action. I set my stop. I'm like, something's weird about this company. Like there was some insider stuff going on. It just didn't look right, and the chart didn't look right. And eventually, I was up a little bit, sold about a quarter of my position, and then it had a really bad down day, and I got stopped out. And I think that down day was like minus 20%. I think I got stopped down like minus 15% or something, wherever my stop was. And it came out that there was accounting issues and possible fraud or something along those lines. And there was basically just some sketchy accounting, and the stock sold off. And then I think the next day, I think that news was fake or wasn't totally true. The next day, Microsoft announced a partnership with them. It went up 40%.
Wow.
So I was like, and it wasn't a large position, right? Like I always manage my positions to make
Yeah.
sure I'm not too overloaded with stuff. But 40% a day that's not an everyday kind of trade. And especially it's not a micro cap company, right? So it doesn't have these wild swings. But I was like kicking myself. I was, texting some of my trading friends. I'm like, man, you guys will not believe the bad luck I just had. And then I think within 3 trading days, I think it round tripped and was actually down worse than what I sold it for when I got stopped out.
Wow.
So like you want to talk about a wild ride of like down 20%, up 40%, and then down another like 30, 40, whatever percent. I wasn't following it that closely at that point, but it was
I
one of those like my system saved me
Yeah.
and that's great, but you can never account for everything that goes on. But I think having stops is important because you always got to manage your risk. Like I've
Right.
never, knock on wood, I've never blown up a portfolio, and that's
Yeah.
I've been doing this for I don't know 15 years now, and it's as long as you lock in profits and you save ammo, you can always get another crack at the bat. If you blow all your capital in one and strike out, it's really hard to start from zero and gain that momentum back.
So I want to close off the conversation with 3 more topics. First of all, AI, gold, and then Bitcoin. So comment below where you think Bitcoin and gold are going to go, and whether or not tech stocks have more room to climb. We're going to get Kevin's take. Before we comment on those asset classes, let's just finish off on a few more trading examples. I've heard numerous examples throughout my personal life, countless examples of trading friends of mine who have bought something and then just held it for longer than they should have. Hey, David, I just got this stock, or I bought options on this thing, and it's up 60%. And I asked him, have you taken profits? Nope. Do you think it's going to go up still? I mean, I don't know, but it just feels like it's a bit early, and I want to sit in on it a bit more. And at the end of the day, it just sounds like greed to me. And there's a difference between patience and greed, a fine line. So how do you draw that line? When something's up 40%, 60%, and you don't know if it's going to go up more. And of course, you could take profits now, and it could go up another 150%. Who knows? I mean, anybody who's bought gold back in 2024, in middle of 2025, they're already up more than 50%. That was a good margin to take profits on. But of course, if you did that, you would have missed out on more gains to $5,000 in the later half of 2025 and 2026. So how do you make the distinction between sitting on something after it's gone up versus taking profits?
That's a great question. For me, it's position sizing. And like I said, scaling in and scaling out. And basically, I manage my risks that I buy enough that if it starts hitting my profit numbers, I start selling some. And then eventually, I'm just left with a bunch of free shares. And those could go to zero and I'd still make money. Does that make sense? Like the math is different on every stock. It depends on your position sizing. But if you have a big gain and you start to, pare it back a little bit, you end up with just free shares at some point. And those you can let them ride until the trend breaks or until you think that sector is done. But I mean, Palantir was one for me. Like I started buying that at 8, 10, 12, $18. And I let that, I scaled out of it. But I think by the end of it, when Palantir was close to 100, I still had, wasn't a huge position, but it might have been, 1 or 2% of my book. And those were just free shares. So I held on to those as long as I could until the trend score really broke. And those are your home runs, right? Like I try to hit singles and doubles, but you try to leave enough chips on the table that you can take that home run swing and still get that big win. Cause that's the fun part of trading, right? Is like, you know, you might have some losses, you might string together a series of losses, but you get that, you get that one big hit and it keeps you coming back to the table, right? Like it's golf. Like I golf, I'm not a great golfer. You can go out and have a terrible round, but you hit that one ball, you hit that one great shot. That's all you think about, keeps you playing golf. It's kind of the same thing with trading, right? Like you can have a bad day, but if you have enough big wins to cover up small losses, you can still have good days. Does that make sense?
Sure.
Are you a
But
golfer?
I'm not a golfer. Unfortunately, never got into it. I'm also not good at staying disciplined when I'm up a certain percentage on trades in my past, which is why I'm not a professional trader now. It's always a question that I've had in my mind, like when do you take profits? Let's take gold for example. At $5,100, okay, yeah, you're up more than 100% since a year ago.
Yep. I think you got to take
You
some
hear
off
all
the
these
table.
narratives on my podcast and on my other shows as well. It's people giving reasons for why gold's going to go higher. Even JP Morgan's got a 16,700 or $6,900 gold target by end of 2026. But anyway, the market's hot right now. And
Yep.
you can either decide to take your profits and not have to worry about a double top crash, which is what we saw in 2011 and 1980, or you could write it out and see if JP Morgan and some of the other analysts are right. Right? What do you sit?
I mean, personally, I'm writing it out right now because I started buying like I think April, May of last year when gold and silver started to break out. So I sold a bunch along the way. I don't have, in my retirement account, GDMN is my favorite way to play gold. It gives you exposure to the producers, the royalty, and spot gold, and that's done really well the past couple of years. So that's kind of a core holding for me, and I just own a block of shares that I won't sell until gold loses its trend. And if for everybody, like everybody measures a trend a different way, right? And that's what makes a market. So some people it's a 200-day moving average. It could be a variety of things. So there's not really one simple answer to that. I'm not trying to dance around it, but I think you need to find a trading style that fits your personality, right? And if you know that you're not very patient, then you need to trade a certain way. If you're a value investor and you can sit on something for a couple years because eventually it'll turn around, you can trade it a totally different way. So I think it's important for people like, you see all these people who are trading gurus on Twitter and they have followers and stuff, and people get frustrated and they're like, we can't follow how you trade. It's because your personality doesn't mesh up with how they trade, right? Like if we'll go to baseball. Say I'm a power hitter and I'm trying to teach you how to hit, and you're not a power hitter. That's not going to work for you. Like you got to find the trading style that works for you. And I think that's what's great about our site is it has a lot of it has a lot of cross usage, whether you're an options trader, like we had 87,000 people visit the site last year, and we have option traders, we have swing traders, we have day traders, we have long-term traders. Like it works for your different style. You just got to know how to use it right. And I think, you know, you can be the greatest stock picker in the world, but if you don't have the patience or the discipline, the patience to wait and see to the upside or the discipline to protect yourself on the downside, like you could have bought Palantir at 8 and sold it at 18 thinking it was great and then bought back in at 100 and gone back to 80. You get what I'm saying? Like it's all about, I think, managing your risk, and that's a big part of this site is managing where your entry should be because mediocre entries don't result in great trades, right? Like you need a great
Okay,
entry to have a
Kevin.
great trade.
Kevin, let's talk about Bitcoin. Let's just we have to let's apply the same analysis to Bitcoin and see what you think there. So 69,000, 68 now. We have
Yep.
a scenario that some people say has some people say Bitcoin has bottomed, and this is the way I see it. So if you just take a look at 2017, it topped around $17,000 and bottomed out much lower. Now in 2021, it then peaked around 69,000, and then actually the bottom was 17,000, or 14,000, around 17,000, which was near the all-time highs in the last peak cycle, which was bull cycle, which is 2017. So it
Yep.
looks like we're entering a scenario where every single bottom happens to be at the top of the previous cycle. Now that's a
Yep.
very simplified way of looking at it, but if we were to take this simplistic evaluation of how Bitcoin's been topping in the last 2 to 3 cycles, well, the third cycle since 2017 is now, and it looks like the current bottom is around 69,000, which happens to be the bottom or the top rather of the last cycle in 2021. So is this the bottom, you think?
Um, I'm looking at it. I mean, I think it's trying to form a bottom. I think
You're
it's
welcome to share your
starting to
screen
find
as
some
well.
medium. I think it's trying to find some, I would say it has medium support here. And I think that's part of what's going on geopolitically. Like, I don't see a heavy support here. Like, if you draw this trend line, it's sitting kind of on long-term support. So I do agree with that. But I think the thing that has changed with Bitcoin, and I haven't seen many people talk about this, is the last time it was kind of in that uptrend, the institutions weren't involved in it. Does that make sense? Like now you have ETFs where you have big institutions buying large blocks of Bitcoin. And I think that changes things because now those institutions all play with leverage, and Bitcoin is kind of already a high risk asset to begin with. And I think I'm not saying I see a margin call coming, today, tomorrow, but those warning signs I talked about earlier, if those go from yellow to red, I think you're going to see a lot of selling in Bitcoin because institutions are going to get margin calls. And when those calls come, you sell what you can. And Bitcoin's a highly liquid asset. So I think, you know, the sooner this Iran situation wraps itself up, I think the sooner I would have confidence saying there's a bottom in Bitcoin. Like I own ETH, I own all that stuff. Like I'm
Hmm.
hoping we have a bottom here, but I wouldn't be surprised if, you know, we have another bad down market day. I think this would flush along with it.
Yeah. Well, finally, I want to get your take on the future of AI. You actually have a book that you could maybe
Yeah.
show on the screen. It's a very old copy of Kurt Vonnegut's Piano Player.
Yep. 1952. So I read this in my freshman high school English class. And what I find interesting with it is it's kind of predicted kind of where we are as a society right now. And it talks about the need for machines and how it replaces labor. And in the book, there's a World War III. And I'm hoping this Iran conflict is not World War III because that wouldn't be good for anybody. But in this society that Kurt Vonnegut talks about, human labor is basically non-existent, and that's because all the people are at the front lines fighting. So they had to basically count on these engineers to build these giant machines um, through these giant corporations who control everything. And I just think it's kind of interesting that you see AI, you know, its role today, and I think how quickly AI is adapting and the velocity of that change, I think it's completely unheard of in our society. And, people say AI is a bubble or debt's a bubble. And I'm personally long both AI and gold because I think that's what gold is sniffing out is I think the quicker that AI changes things and it's fundamentally altering a lot of basic principles in our society right now. And I think the quicker it changes stuff, the higher gold goes. So I think, I own both, especially in my kind of longer term retirement account. And I think, it's just an interesting way because AI is deflationary and then gold is a hedge against inflation. And, you've seen Trump come out and say that he needs basically to run a hot economy because Doge didn't work and we're trying to inflate the debt away. So I think it's just a very interesting position to be in when we're trying to run that playbook, which is kind of an older school playbook with AI being deflationary. And, you have Elon who knows way more about AI than I ever will. People say, he's making these crazy claims about the average person not having to work in the near future or a 4-day work week or a 3-day work week. I have no clue if that's right, but there's a non-0% chance of that. So I think you need to factor that in. So I look at gold as, it's a core holding for me. Like I mentioned GDMN before, I own producers and royalty companies, but I don't think gold's hedging against inflation so much as I think it's hedging against our inability to adapt as a society and how quick AI is moving. Like our government, our corporations, our infrastructure, our court systems, like nobody's had to deal with change at this quick a pace. So I think that's kind of the risk I see. And I think owning those disruptors, like I mentioned, VRT, like that's been a great disruptor in the AI space. So if you can partner that disruption with something like gold, and gold's done really well, I think you're creating a really interesting portfolio. And that's what's worked really well for me. And that's why I had such a great year last year. But I think people see the debate as you got to be either team gold or team AI. And I think they actually both complement each other very well.
It's
But
interesting how they're both complementing each other really well, because AI represents the next wave of humanity, whereas gold has been a form of money for the last 5,000 years. So you've got a confluence, pun intended, of the old and the new happening right now. One would think that you would want to be in digital assets or some sort of digital currency as AI becomes the new norm. In other words, the new with the new. But you're saying that you're picking a really old school asset partnered with a really new wave idea. I mean, how do you explain that to somebody who doesn't understand finance here?
yeah, I think, I mean, I think that's part of the reason Bitcoin sold off too, right? Is I think people are betting on AI even disrupting Bitcoin, and you can't disrupt gold, right? It's just a fundamental asset. You can't mass produce any more of it. It's whatever is created and whatever we've mined and smelted and have in bank vaults, that's what's out there. And I just think, I don't know. I think gold's always going to have a place. And you talk about, the bricks of the world trying to change the petrodollar system. Like you have all these different things that are trying to change right now. And gold's just that fundamental thing that doesn't change. But again, I think part of what gold's picking up is the potential disruption of AI and the deflation that it could cause because our society can't adapt quick enough, right? Like US government gridlocked on everything, hasn't been able to pass anything. President just pushes through executive orders. That's both sides of the aisle. Our court system, it takes them months to even hear a case, then you got to try a case, then they meet, talk about it. The tariff thing took forever. And for a while, that was a big overhang on the market was people weren't sure if they were going to win or lose. And then it got priced in they were going to lose. And then now you got the appeal. Like you have so much uncertainty. That's personally, disruptors in tech have always done well. So I bet on the disruptors. And then you have gold, which is kind of just a fundamental thing. So I think if you build a portfolio and you build a little bit of both, it's two different ways to play
Yeah.
the same outcome, in my opinion.
So in Piano Player, the author Vonnegut is predicting that at some point in the future, we're going to have basically two classes of humans. We've got engineers and managers at the top. The engineers are the computers and the automated factories and the robots. And then everybody else basically left jobless, unemployed, and alienated from the rest of society and feeling really purposeless. So two-part question. One, do you think that's actually where we're headed? And number two, if so, wouldn't you want to be short companies that are heavily reliant on human labor, whatever industry that may be?
Yep. One, I think yes. I think that's kind of what the experiment is with UBI, the Universal Basic Income. I
Mm-hmm.
think that's why ChatGPT, OpenAI, like they've experimented with some of this, and their experiment, from what I read, didn't really go that well because I think a lot of people's self-worth is tied up with their job. And if you just sit home all day and the government or whoever that may be in that situation gives you money. Um, I don't know how filling that is as a human being. And then the second part, I think the part Vonnegut got wrong with the book is I think there's always going to be companies who are going to have to dig out the stuff, right? Like I think, I'm long a lot of critical minerals, REMX, like a lot of those different plays because we're going to need those critical components to make the AI because without it, it doesn't work. And I don't know mining engineering well enough, but I think there's always going to have to be people using the machines to go down there and get it out, at least for the time being. And I think, part of that is, we have all these missiles and all these different things that we're using on Iran, but I think, the question to Trump is eventually at some point we probably got to send somebody in on the ground to really finish it off. And that I think is spooky to the markets. And I have friends in the military, so I hope that's not the case because I want them to be safe. But
Yeah.
um,
This is
I think
completely
they're
off topic, but just curious, what are your friends in the military saying about the situation?
um so I had a couple of friends a couple of weeks ago told me that this is going to be a real thing. This is ramping up and
Yeah.
it's going to happen. What I've heard is I think the plan is I think they're trying to arm the Kurds
Hmm.
in northwestern Iraq. I think from what I've read, the CIA's been doing that, and I think we're going to try to have them do the hard part for us. I have no clue. I'm not a geopolitical expert, so I have no clue if that's a good thing or a bad thing. I know we helped them in northern Iraq multiple times, but I don't believe our record with the Kurds has been stellar. So hopefully, if we do support them, we do the right thing by them. But my friends in the military don't see this ending in the short term, and I know Trump keeps saying that, but I could see this going unfortunately until the US market stock market can't handle it anymore. Like that's been the driving force behind Trump. I think he views his overall record is tied very closely to the economy. And in his mind, I think the economy is a stock market. So I think, those indicators I said before, if they all flash red and the market starts flushing, I could see Trump push for the end of the war a lot quicker than if we keep having up days. Like I think, unfortunately, I think, you know, I've seen Polymarket and Kalshi like betting like is it September, October? I mean, I'm hoping it's quicker than that. But I think Iran's pretty stubborn and they're pretty upset. So I don't think they're gonna just, unconditionally surrender like
Yeah.
Trump's rooting for in the short term.
Well, I hope your friends in the military are safe, and I hope this doesn't escalate beyond what's already happening. So let's see what happens there. But to finish off the conversation, if we were to have a scenario which plays out like Piano Player in the book, what industries would benefit, you think, from a disruption in the labor force? In other words, is it a scenario in which basically all companies get a boost in margins because human capital is cut out, and you have just fewer amount of people in this workforce producing the same level of output? Or are there certain industries you think that would benefit more than others?
I mean, I think you always have winners and losers, but I think, painting with a broad brushstroke here, earnings would get better. And that's kind of what drives the corporate machine, right? Is earnings per share and revenue guidance. Like if you don't have as much headcount, that's less compensation you got to pay, that's less payroll taxes you got to pay, that's less benefits you got to pay out for healthcare and retirement and other stuff. So I think, the disruptors and the infrastructure that supports those kind of companies. So like, I like to trade ETFs because they're liquid. It diversifies your risk. Like I'm long AIPO, which is the AI infrastructure play. I'm long Grid, which is a US infrastructure play. I'm long Pave, which is a similar play to that. So, you mix those in with gold, with, critical mineral stuff. Like that's the way I've kind of positioned my portfolio here both last year and still this year, because I think they go hand in hand, right? Like you need the infrastructure to be able to support that innovation. And Trump's really pushing to bring all that back here. And I don't know what the timeline is. I don't know how successful it's going to be, but I think in the short term, there's opportunity there for the trading, side of things. And, it's the more things that get disrupted, there'll always be a group of winners. And
Yeah.
I think it's just really important to, stay open-minded and not, Palantir might be a great company 10 years from now. I have no clue. They could go to zero. Like, there are certain people who are calling them a bubble and they epitomize everything that's wrong with modern day accounting. I have no clue. But if the chart tells me they're in an uptrend and it looks good, I'm going to trade it as long as the chart looks good. And when the chart doesn't look good, I'll get out and go on to the next ticker.
All right, Kevin, let's end it here. Good introductory call. Thank you. Where can we learn more from your work and follow you?
Yeah, so it's stockta.com. We got a YouTube channel where I try to do some either monthly videos or weekly videos. It's just at StockTA. We have a Substack called at StockTA where I just kind of point out interesting charts. But please come check out our website, and you can sign up and create an account for free and get access to all the premium tools. And yeah, we look forward to you joining our community.
All right. Well, we look forward to people signing up to Kevin's platform, link down below. So follow Kevin there. Thanks, Kevin. Good to meet you. We'll follow up again soon. Take care for now.
Take care.
And thanks for watching. Don't forget to like and subscribe and use my code. Don't forget to use my code LIN, L-I-N, link down below, or scan the QR code when you trade on Kalshi. Remember, by using my code, new traders will get $10 deposited to your account when you trade $10.